So tonight's date, November 11th, and just going to look at Tesla, Netflix, Amazon, Google, Priceline, GoPro, and Twitter, and kind of put together some biases and setups between now and Friday, what I think you should be watching for to play out over that time. So first thing I'm going to look at is Tesla. Tesla had a really nice day today on above average volume, and you can see on my chart here it broke above this downtrend line and saw some nice extension above it, closed at 250, which is its highest close since mid-October when it gapped down. And I think Tesla really has a shot at upside momentum from here. Tesla is one of my favorite setups between now and the end of the week because I think it's just simple. As long as you stay above 250, you want to be bullish on Tesla and you want to look for higher prices. If you come back below 250, then that would complicate things. It wouldn't be as clear. It might kind of go sideways or pull back. But to me, in order to really start selling again, you need to give up all of this move today. So you probably need to come back below 240 to start selling off again in Tesla. I don't know that I'd really look at trade opportunities between 240 and 250. I think that would kind of be choppy channel-like price action. So best case scenario on Tesla from a trading perspective, in my view, is staying above 250. I think if you do that, then the next move is a test of your October highs, which is right around 265. Okay, and if you can get above 265, then all of a sudden these all-time highs, up near 280, 290 start to come into play really quickly. We know that Tesla has shown a tendency to really make big moves. If you just look back on this chart, there's more than enough times I could point out here, and I will do it, where this thing's really gone up 20 to 30 bucks in not a lot of time. You look at the beginning of the year, you went 140 to 180 in just a few days, and then in mid to late February you went 200 to 260 in about a week, and then in early June you went 200 to darn near 240 in just a 3-day move, and you went in early August 220 to 260 over about 2 weeks, and then in late August you went 260s to 290 in just about a week. So we know what Tesla can do. We know what it's capable of. It has shown us that. So that's why I think you really should have this at or near the top of your list while it's above 250. That's the key. Stay above 250. You might get one of those really hard moves to the upside on Tesla, and it might even be this week. I would not be surprised if you saw 260s this week. But again, the key is staying above 250. Looking at Netflix. Netflix is kind of odd to me. Let's get some of these trend lines out of the way so we can just look at a regular chart here without the lines. And I'll explain why I think it's somewhat odd. So we know Netflix gapped down, hard on earnings in mid-October. You can see the big gap down, but you had a nice recovery. You went from 330 up to nearly 400 bucks, which has been the ceiling the last 2 weeks. And the reason I say it's odd is because today you were looking good. You were up near 395, and then you just reversed kind of out of nowhere. I'll show a 3-minute chart to kind of show the action. Starting around 12:30, you went 392s and ended up closing near the lows, down near 382. So, and it wasn't like the market sold off. It wasn't like other momentum stocks sold off. I mean, Tesla, Amazon, Priceline, all these stocks closed near their highs. This was really an isolated incident just with Netflix. So I think that could be a sign that maybe Netflix wants to sell off a little bit and is maybe net weak overall. But the key is you got to get out of this channel. If you look, you had a nice rally and basically you've been channeling the last 2 weeks between 375 on the low end and 390s on the high end. So give me a close either above 390 up here or below 375 up down there, and whichever one comes first, I think then that's the direction we're going. If it's above 390, then I'm looking for a move above 400s. If it's below 375, then I'm looking for a move down towards 360 to 350. So this week, I wouldn't be surprised if Netflix kind of stayed in that 375, 390 channel. But if you get a breakdown or a breakout out of that channel, I think you could be aggressive. I think there would be a really nice move on Netflix. You know, say for instance, maybe she drops a little bit tomorrow. Say hypothetically she drops 5 points or so, which would be about, you know, 1.25%, just about takes it down to 377. But then if you had an early breakdown below 75, you know, you could drop 17 points in my eyes pretty easily. You'd be talking about a 4 to 5% down move. We know Netflix could do that, and you'd be back down at 360. That would be a nice intraday move. So any intraday breakdown below 375 would really catch my attention from a bearish perspective, and I think you'd look at that as a short trade. And as for the upside, got to get a daily close above 390. And notice I don't say intraday break above 390. Why? Because we've seen that a couple times not really result in anything. We saw it on the 31st. You closed above 390, but then you came back down the next day. And then we saw it today. You broke above 390 on an intraday basis, but as pointed out, reversed off of it. So you need to start getting some closes above 390 on Netflix. Looking at Amazon, Amazon to me looks pretty decent. I think Amazon kind of has a breakout here. Preliminarily, you can see this downtrend line that I have. This is a downtrend from the September and October highs that it poked above today, and kind of its first higher high got above that high from November 3rd, November 4th, whatever the first trading day of November was. And I think now you could start to see dips get bought on Amazon. This is what's interesting to me. You've got a double bottom. You look at that May low. It was right at 284, and then late October you came down, tested 284, but bounced. This was a name that I thought was pretty bearish, but you know what? Amazon proved me wrong. Came back above 300, and really nice day today. Volume's pretty decent. It would be above average volume if it wasn't for this one day here in October off of earnings. So I'm just going to say that volume's solid. And now it's just a matter of staying as far away from 300 as possible on Amazon. If you see Amazon dips holding 310, that's a great sign. Look at that for a long trade. Between 300 and 310, maybe just let it shake itself out, see what it's going to do. Me being more conservative, I would wait and see, is it solid above 310 and then get long. I don't really want to touch it between 300 and 310. That could be consolidation. As far as the short side, get back below 300, and then everything I just said about a potential bottom and buy the dip gets thrown out the window, and you start looking for a move back down towards this 290 to 280 range. So I like the setup on Amazon. Stay far away from 300, and you go higher. Come down to 300, wait and see. Below 300, you go lower. Looking at Google, Google is trying to poke its head above a downtrend line as well. Did get a close above it here. We'll see if it gets extension above it the rest of this week. Google is another setup where you're at 561, and between 550 and 560, I'll say the same thing about Google that I just said about Amazon. I don't really want to touch it. Let it do what it wants to do between 50 and 60, because it's just a consolidation. It might be breaking down or it might be holding. I'm not smart enough to know. So that's why, to me, if you're holding 560, then that's where you can get aggressive on the long side on Google and target upside. You get above this 570 high, and I think it's off to the races for Google back up into that 580 to 600 range. As for the downside trade, got to get back below 550. Back below 550 would be a lower low. and you would start to see the stock come down into the 530 to 540 range, which is the area of this little move off the bottom that it made, and I think it would back test it. So I like the Google setup as well. Hold 560 is the best case scenario. That targets upside. Below 550, I would think 540 to 530 is all but guaranteed, and then we'd see what happens there. Looking at Priceline, very impressive recovery today. Had the gap down last week on earnings, but came into it and filled the gap, or at least a good chunk of it here today. And I think this kind of confirms that you can buy dips on Priceline. It's been kind of a struggle for the stock. It's just barely green on the year, but this is a big time recovery. Priceline had every chance to sell off towards 1,000 bucks last week off that gap down, and it didn't do it. It decided not to do it. So I think you are bullish on Priceline, or at least, you know, neutral to bullish. The one thing I will say though is you've been in a decent little channel. You've had different levels of channel activity. You can see I had these two trend lines from dating back to May, where you were pretty much just briefly below 1200. About 1190s to 1290s was the channel. From all of May through September, you dropped below that and came down. You know, now you've recovered. This was about a 100 buck channel, right? Well, now you just bottomed out around 1090, and I think you could be setting up to come up near 1200 or 1190 for a top end of the channel. And I wouldn't be surprised if we see Priceline kind of bounce around between 1100 and 1200 between now and the end of the year. I think Priceline personally has a tough time really rallying on the year, since it hasn't really done much on a year-over-year basis anyway, and you know, we're in November by now, so it should have done something by this point if it was going to have a big move on the year. I think that's just my opinion. So I think you can trade upside while above 1150 and look for that move towards 1200. But if you do start coming up on 1200, I would shift to a short bias on Priceline and look for a channel move back down towards 1150 to 1100. Because like I said, I think that Priceline 1200 and 1100 is going to be a good floor and a good ceiling on the stock between now and the end of the year. Hope I'm wrong. You know, want better direction. If I'm wrong, you're going to see it be able to solidify itself back above 1200 bucks. Right here, right now, I think Priceline's a bit overbought. Not sure I would chase this move. I think you missed a really nice two-day move if you didn't trade this, and now maybe look for some consolidation around the 1150s. Looking at GoPro. GoPro was interesting to me today. And before I talk about the daily, I'll just talk about intraday. The reason I say it was interesting is because you had a level of 75 bucks, which psychologically, you guys know I like levels like 75 on a stock like GoPro. And you broke below it at 12 o'clock, and you initially saw an okay move down. You know, you went 75 to a 74 test, but that was it. And then you just consolidated between 75 and 74 all day long. And that's not very good from a trading perspective. I would have wanted to see the 75 breakdown really lead to a good flush, and it just didn't happen. So I think that GoPro volatility might just not be there right now. So, you know, maybe stay away if you're trying to own premium. I think GoPro's maybe a good premium short. The ranges are getting really tight. We need to get a good flush below 75 if it's going to sell off into the 60s. Otherwise, I think you're setting up to bounce back up towards 80 bucks, and then you need to get a good clean hold above 80. This stock's been kind of choppy over the last 3 weeks since about mid-October, and I wouldn't be surprised if that chop action continues. So GoPro, I guess you could say I'm not really a fan of the way it's been trading from a directional perspective. Look at these, 4 days in a row, extremely tight ranges on the stock. It has been gapping, but unfortunately that's been the majority of its percentage change has been coming off of gaps, not intraday movement. So got to get some intraday action coming back in the GoPro before I can really have a clear opinion on it. Otherwise, just kind of watching this over under 75 and try and make the most sense of it as you can. We'll point out though, we are failing to potentially hold this uptrend line, but the bulls would say, hey, you're below this uptrend line and you're not flushing off, so give the uptrend line a little bit of leeway and you're going to bounce back above it and everything's going to be all roses and whatever the expression is again. So like I said, just not really clear to me on GoPro at the moment. One stock that is clear is Twitter. Twitter is bearish. I mean, this thing has been getting killed for the last month off of that $50 high in early October, and the trade that's been working is shorting it and shorting it every time it tries to bounce. She has just not shown much of a bounce at all. We don't have a high volume capitulation day at all. I want to reference this action here when Twitter was on the way down. Okay. So this is back in late March, early April into May, and I want to point out that you had a similar drop. You dropped from 50 bucks down to around 40, and then you kind of consolidated around 40 here, and then you broke below 40 again, and you had a huge washout day on mega volume this day here, where you dropped from 36 down to 32. Next day you had huge volume, dropped from 33 down to 30. All right, and look at this volume flow. You had 120 million shares and then over 60 million shares, about 70 million shares. That was capitulation, and after that happened, we then saw a kind of bounce back up and sideways pattern. That volume at the time, since it was holding then, looked like maybe it was a potential bottom, and sure enough it did end up being a bottom. And that's what I'm looking for here. You look at our volume on the way down. I mean, 19 million shares today, 19 million shares yesterday, 18 million shares the day before. Yeah, we had 83 million in October, but the problem is we've continued to go lower. So we need another super high volume day like this one in late October. We need, I'm talking 60, at least 50 million shares. At least 50 million shares. Ideally, you want it to be north of 60. You need a mega volume day like that to really signal that there was a big washout and a bottom in the stock. Until that happens, then I think you keep shorting Twitter, because this range here between 35 and 38 is where it looks like the stock wants to go. As for a bounce, I wouldn't take a short trade off on Twitter until you get above the high that I just put a line over, and that is basically 42 bucks. So if you get above 40, you can get a bounce up towards 42, but long as you're below 42, Twitter's going to the downside in my opinion, and I would short any bounce that you saw that stayed south of 42. Bigger picture perspective, get back above this gap, between 44 and 45, and we can start looking for a gap fill back up towards 48 to 50. But I think there's more pain in store for Twitter. So that's a wrap on the primaries. Let's look at the S&P 500 quickly. You can see that you've just been continuing this rally off of that October low. The market's extremely overbought right now. That's the first thing to note. But just because something's overbought doesn't mean it can't stay overbought for a long period of time. Watch 2040, as that is 2% above 2000. So it's just one of those 1% marks. I like keeping track of those just psychologically. I think the institutions and the big buyers pay attention to them. So be watching that 2040, but you got to come back below 2000 to see some type of downside. anything above 2,000 you want to BTFD. If you don't know what that means, go ahead and do a Google search for it. I think it'll come up, but I'm sure most people know what BTFD means. Buy the frickin' dip. So yeah, I mean, the market, I'll say, while it's uptrending here, hasn't been very exciting. All right, this was exciting. Okay, this was exciting. Going from 1850 to 2000 in 2.5, 3 weeks, that was an exciting move. But now you look at it and you've gone from 2025 to 2040 in 1, 2, 3, 4, 5, 6, 7 days. So you've moved 15 points net in 7 days, an average of 2 points per day. That's not a very exciting move. So this is kind of more of a chop move higher than the momentum move higher. I would say that the move off of the October low was a momentum move higher, more of a straight line. Now this has been more of a choppy diagonal type line. So just keep that in mind, but I am bullish on the market as long as you're above 2,000. Come back below 2,000, we can set up for a 1950 back test. Okay, so those are my outlooks on the primaries and the S&P 500. Again, I'm out of town on Thursday and Friday, the 13th and 14th. I'll be back Saturday though, so next week pick things up business as usual. Good luck, guys. Hope you do well, and hope the market gives you some good moves. Take care. Thanks.